It's Monday morning or Monday day, wherever you are. Welcome to our global webinar series, Real-Time Daily Trading Ideas, 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar, like every day, also on Monday, 8th of October 2018. And we will start with our risk disclaimer like every day. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything in long form there. Also, other information like the key information documents, for example, the kits, everything to find on our web pages like admiralmarkets.com. Also, some more information like the differences between retail clients and professional clients. If you're in the European Union, maybe you know it, it's a topic of the year. There's a different offer for retail clients and professional clients. Sometimes the picture shows more than 1,000 words. 2 prominent examples, DAX 30 and Euro dollar and the margin requirements. Retail clients and professional clients will have a different margin requirement and different leverage, 24 euro to 600 euro for DAX 30 as in one example, and for Euro dollar for one full lot, 200 euro and 3,333. Big difference. And if you'd like to read more about that, just visit one of our web pages like admiralmarkets.com. Retail clients will get an unlimited protection against negative balances, professional clients not, depending on your broker where you are. At Admiral Markets, you will get an additional protection via our negative balance protection policy up to 50,000 British pounds, what is around about 70,000 euro. Also there, all details on admiralmarkets.com. This is me. My name is Jens. I'm the German guy from Admiral Markets. We are a big international Forex and CFD broker, over 18 country offices. So my English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, like today, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. On Friday, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30 or also Euro dollar triple spread of just 0.8 points or pips during main trading hours without additional commission. Also here, check all details out on admiralmarkets.com. Enough from my side. Now it's time for the day trader of today. Good morning, good day, Jay. What's your view to the markets today?
There we go. 3 times back and forth, Jens. Good morning to you guys. Can you hear me? Are we okay on sound? Can you hear me?
Everything is fine.
Okay, excellent. All right, let's rock and roll. Another week. Good morning, Bob. Good morning, VT, Rudy, Jörg. Lots of familiar faces already here on a Monday morning. As always, I'd like to thank you and Jens for the opportunity to lead you off into the markets. As the Marines used to say, first in, last out, and this is how I like to do it. We are the first in. A little late on a Monday morning, but it's okay. We're doing swing trading. First off, let's review the trade from last week, short New Zealand Canadian dollar. We're looking for a retracement towards the POC at around the 0.84 big figure, and we never got there. The market tanked right away. So as very, very often we got the direction correct because because it is an institutional process and institutions trade the way that I'm trying to show you guys. And since we have the big money, we give the direction. Headlines for this morning. By the way, I hope you did make some money. One guy on Facebook posted he did make some money on the short New Zealand Canadian dollar. So happy for you, mate. Risk was mixed. Japan, Canada, and the US are on holiday. It's Columbus Day, so there's reduced liquidity this afternoon. Be aware. Also, as I'm looking over towards my indicator, I can already see that the Japanese yen is being bought up. There's some strength flows going into the yen, a little bit of a risk-off scenario. And with Japanese market participants not there, easier to manipulate. US also off even. Remember, there's also no treasury trading today. So very, very, might be better off to go to the gym today. Asian equities are red. We had a weak lead from Wall Street on Friday. We closed the worst week in a month. A little bit of risk off coming in. Why? Because rates are rising. The EU is preparing this week to offer the UK a supercharged free trade deal this week, but the headlines are getting really, really meticulous on the Brexit front. Really meticulous. I don't know who of you in here this morning is from the UK and what your personal opinion on it is. I would be super eager to read a comment of yours. If you want to type something into the chat box, I'm really, really eager to hear from some of the UK people. Hi, Dom. What your opinion is and what the outcome may be. To me, certainly looks like there may be a little bit of a Canada-style agreement going into place, at least until 2022. So my current scenario, my personal current scenario is UK will remain in the free trade zone somehow until 2022 to buy more time. Let's see how it comes off. Brexiteers are going to offer PM May supposedly a lifeline with a little bit of an agreement where EU officials could be based at UK borders. Currently, the market is pricing in a deal by the November deadline, not in October, but by November. Brazil, emerging markets. We have two things going on. End of the month, we have a court ruling over in Turkey regarding this pastor. I don't know if you remember, but we had Pastor Brunson, and the guy was supposedly based on Erdogan's exclamations, a spy for the Gülen movement, and I don't know if I'm pronouncing this correct. Anyhow, we have a court ruling there. The whole thing did not get much attention recently, but we have it on the radar because it's Friday, October the 12th. That's when the court ruling is scheduled, and this may pop up again. If it's positive, if he will be released from house arrest, maybe the Turkish assets, i.e. the currency, but the bonds and also the equities will recover, but the economics are weak in the background. So I'm still looking to short Turkish assets given this environment. Over to Brazil. Jörg, I hope that you are completely switched on to the situation over there. We have right wing versus left wing. And guys, this is happening all over the world. A far right candidate is winning 46.1% first round votes. This is like the Donald Trump of Brazil. People are sick and tired of, well, I can't say they're sick and tired, but there's a global scenario in the Western world and in the developing nations between democracy, socialists versus centrists or right-oriented politicians or political voters, the populists so-called. And the next round in Brazil is October 28. The market, and this is important for us because we're looking to make money off of it, the market favors Bolsonaro. Why? Because he has a US educated economic advisor. So the assumption by the market is that if this guy wins, then this socialistic increasing the deficit and implementing more socialistic measures will finally stop over there, and more market-friendly and potentially austerity measures will be implemented. So if Bolsonaro wins, expect Brazilian assets to rally. Important. Then China, regulator cut for the fourth time this year the reserve requirement ratio by 1%. This is to 14.5%. So that means Chinese banks need to have 14.5% reserves of anything that they put out in terms of credit to their clients. And this will, reducing this ratio obviously releases funds, and this is in the amount of 750 billion renminbi of liquidity. Overnight, they took 100 billion out of the market. And this is coming into effect in a few days. So there will be 750 billion. Keep an eye on the US dollar CNY, USD CNY. It's above 6.9. 7 is the magic number. It breaches 7, all hell breaks loose. So keep an eye on that. For us, another very important spread for the euro weakness currently is the spread between Italian 10-year yields and German 10-year yields. And Italian administration said they don't care if it goes to 4%. I put the 4% in here for you guys so you can see the red line. Now, my assumption is the market will test the 4. That's what politicians don't understand. You give us, the bond vigilantes, a target, we'll come test your balls. You're ready for us? We're coming for you. So we're currently above 3. So expect this to go to 4. Great trade, by the way, for my traders who know how to put this on. This morning, quick picture. As I got to the desk, I did see some pound weakness, and there was a slight recovery in the antipodins. We have New Zealand and Aussie dollar, a little bit of strength. Right now, picture has completely changed, and we still have, not completely, but we still have pound weakness, but we have some, I'll draw it in, your strength coming into yen. Easy manipulation when the guys are on vacation. Easy manipulation. All right. Risk events for this week. Let's do this live. I hope you guys can see this. What's on the agenda? As we said, today we have bank holidays. Sunday we had the Brazilian election. We want this far right guy to win, so then we are long Brazilian assets. On Monday we had Chinese Caixin Services PMI, came in better than 53.1, much better than expected. So on the manufacturing PMIs, they came in a little bit weaker last week, but services are coming in a little bit better. So that's good. And then we have Eurozone Centix, and I think I need to. Centix came in as expected at 11.4. Japanese current account on Tuesday right here. A positive current account usually is positive for the currency in the long run. And as you can see, if it comes in much better than this, we expect more Japanese yen strength. On Wednesday, we have Australian GDP. We want to keep an eye on that. Where is Australian GDP? Australian GDP. Can't see it right now. Then we have US PPI, UK monthly GDP, production and trade balance. I prepared a slide for you guys for that, so let's go over it on the slide. You can see here a little bit weaker than last time, and manufacturing better than last time in terms of GDP, in terms of pound expectation. And then very, very important PPI numbers and core PPI out of the US. And then on Thursday, the CPI numbers and core CPI also out of the US, very important. We also have Japanese PPI numbers on Thursday over here, 2.9 versus 3. But as you all know, inflation just not really kicking in Japan, unfortunately, for them. And then we have ECB minutes on Thursday. I prepared a slide on that, so we'll go over that slide together. And then on Friday, we have the production. We have Chinese trade balance. That'll be of interest to us. Then we have this Pastor Brunson court decision in Turkey. And please recall, U.S. banks are kicking off the earnings season. I did have a little comment. I put a comment on there on the slide there. So without further ado, ladies and gentlemen, let's get into the slides. What do we have in the dollar? We have headline consumer price inflation seen rising on a month-on-month basis by 20 basis points in September, and year-on-year to 2.4%, falling from 2.7 in August. So as you can see, inflation rate coming off a little bit, but core measure, the core is seen rising 20 basis points to 2.3 from 2.2 previously. The core is a little bit of more focus to the Fed. And with Amazon last week announcing that they come in with a minimum wage of $15 per hour, that kicked in inflation expectations. We had a 2.5-hour webinar with my traders on that topic yesterday, and that is just steepening the curve, the US yield curve, and that is causing the equities headache, a severe headache for now. Volatile prices are in medical care and apparel prices, and those were the key drivers. And according to RBC, we could see a lift in the core month-on-month figure by slightly more than the consensus view. So that would then lead to additional US dollar strength. So keep an eye on the core measure when the number comes out, please. And on Friday, we have the earnings season, and as promised, the energy sector will likely be the star of the season. Why? Because analysts are looking for earnings growth of over 100% on the last quarter. And then utilities and real estate are likely to be the laggards, with earnings growth seen at below 5% for both sectors. Why the laggards? Who can tell me? I know my guys can tell me. Why laggards? Utilities and real estate. Higher yields bad for margin. Correct, Chris, one of my guys. Rising yield curve sucks for utilities because they have a lot of capital intensive balance sheets, and that's higher yields means their balance sheet gets more costly. Real estate, the same thing. Do you enjoy paying more for your mortgage when you refinance? No. So it's very logical. Good one, Lovro, good one. And Bob, I'll get back to your comment in a second. Really appreciate it. Same for you, Alex. I appreciate you guys coming in. Really great. Thank you for that. Okay. Over to the UK, GDP, August data, expected to see year-on-year growth slip to 1.5 from 1.6. Or what's happening there? And on month, 10 basis points lower from 30 basis points last time. So we don't want GDP seen slipping, okay? Not at all. Growth still remained positive though in August, and the composite PMIs are also still positive. And retail sales did slow, but they're still expansionary. I'm a big fan of the UK economy. Hopefully it'll hold and recover. It also very closely linked to the November potential EU deal, obviously. Manufacturing production, on the other hand, is expected to come in with plus 10 basis points versus negative 20 last time. You can see a decline here. That's also not nice. And the thing that really strikes us is that we are seeing a discrepancy, a divergence between firma survey data. So, for example, business confidence, that is survey data, and that's firmer, and then softer manufacturing output data. So one of two things is expected to happen. Either this manufacturing hard data is starting to rally, or the soft data is starting to come off. And obviously, soft data depends heavily on sentiment, which again is expected to be driven by Brexit headlines and developments. So good volatility in the pound. I also selected a pound trade for this week. Euro, Thursday ECB minutes. The statement was broadly unchanged from the prior release. It was a snooze fest, but growth is broad-based. They said inflation is rising and the strength of the economy supports confidence. Tend to disagree. Looking at the composite PMI, and we discussed this, as I said earlier last night in our webinar, peak growth may be behind the EU. So I don't think the growth is that sustainable currently. The latest economic projections for 18 and 19 growth forecasts were lowered to 2.0 and 1.8 respectively, with all other projections maintained. So let me say this slowly. The EU lowered their growth projections. Italy came out with a budget where they're saying we're going to incur debt to GDP of 2.4%, but all assumed on economic growth numbers that were ridiculed for 2019, 2020, and 2021 by the market. So the topic, and that is why the spread between 10-year yields in Italy and 10-year yields in Germany is rising, is due to the fact that the market doesn't believe that Italy can grow in the future according to their own planning. And I agree with the market. I don't think Italy is going to be in a position to do that. So if peak growth is behind us within the EU, and if the trade war causes global growth to slow down, happy days, we can short the euro like there is good money to be made for us. Focus is going to be on whether there was a more detailed discussion on the bank's reinvestment policy. This is really what the market wants to know. Okay, you're stopping to purchasing bonds. You're going to stop purchasing bonds. Good. But what are you doing with all the bonds that are expiring and all the funds that are hitting your balance sheet, dear ECB? What are you doing? Are you reinvesting? How are you going to reinvest? And where are you going to reinvest? And that policy, the market wants the ECB to communicate, what are you guys doing with the money that comes in? And obviously, the market wants to know, when are you guys committing yourself to precise timing for your next rate hike? Currently, September 19 is priced in, potentially a little bit beyond that, but not much. And last but not least, the market will focus within the minutes if there was any kind of discussion regarding the risks surrounding Italy. Okay? Over to what may or may not be a trade this week. Commitment of traders. You can see dollar not at an extreme positioning. And thanks for Michael for calculating that for us on a weekly basis. Aussie continues to be on its way to a long signal. Again, all these commitment of trader reports, educators, we're all getting the same signal. The problem is if you don't understand the macro picture, it's useless to trade statistical systems, because one year you'll make money and the next year you won't make money. In the bank, you get paid to make money every year. It's impossible not to make money if you know what you're doing. So as long as the trade war is going on, as long as China and US are at it, the Aussie dollar has severe problems rallying, severe problems, okay? That's why that signal, for example, is not working out. Yen is on its way to a long signal, that's new, and New Zealand dollar continues to be on its way to a long signal. This morning, I look over, yes, we're seeing a little bit of strength in the New Zealand dollar. Nothing to write home about yet, not at all. The big boys are so short in these two currencies, so short, it's going to take a very long time to turn that profit, to either take profit on it and go flat, or reverse it into a long, and there's just no way, as long as this war is going on, that it's turning into a long. Volatility, euro 757, last week 745, so a little bit of an increase. Pound 935 versus 983, coming off a little bit. Let's see what this week brings. Yen 752, rising, excellent. Higher vol means better opportunity for us as traders to make money. VIX 16.25, excellent. That's due to the sell-off. Excellent, excellent. We can make some money. Option pricing this morning, we had a bullish signal for long euro versus pound. We didn't have a clear bearish signal for this session out of option pricing. In terms of option flows, we had bullish signals for Canadian dollar, yen, that worked out nicely, Swissy, and gold. Again, Jörg, why can't gold rally? Why is it impossible for gold to rally right now? He's my gold trader, so I expect him to type it in as we speak. Are you there? Okay. As long as the Dixie, exactly, dollar strength. Strong dollar, weak renminbi, gold can't rally, okay? So disregard signals like that. It's a puzzle. You got to put the puzzle together. You got to understand why something moves or doesn't move. Even if we have a risk-off scenario, money will flow into the US dollar. Forget gold right now. It's not a long. Bearish Monday, London, Aussie, pound, euro. Pound worked out really nicely, really nicely. So potential trade for this week. I'd like to go a little bit risky on this one. So beware. This is me trading. I want you to take your own trades. I'd like to short cable. Why? We had superb numbers out of the US. We have a rising yields over there, and we have dollar strength. The Dixie, the dollar index, continuing to rally. We had a little bit of a retracement. I expect it to continue on. Could be completely off, but I don't really think so. Pound, Brexit headlines, and weaker pound figures for Wednesday. So I'm a little bit upset that they're taking the pound lower as we speak. I wanted them to hold it, right hand, top right hand hold, and then hit it. That upsets me a little bit that we're lower already. So I'm waiting for a retracement. My risk to the trade is that the CPI and PPI numbers may disappoint out of the US, and or that we get very positive Brexit headlines that could yield to pound strength, and or the GDP numbers beat on Wednesday. Chart picture. I'm looking to short the 130.80 area where we have a daily pivot and a weekly pivot, and we have an R1 today. All good. We have a couple of square ups ahead of us, and this is unsustainable. Altogether, we're still trading in a box. So I'm looking to short top edge back to fair value, potentially a full rotation all the way down to bottom edge. But what we're seeing is we're getting a little bit of buy absorption here at the role reversal right now. So it could go a little bit higher. It could go all the way to up here, do a double top, and then hit it. It's high risk. Again, if there's very positive headlines, then this trade may get stopped out. You know, we're definitely wrong if it takes out the highs. Then it's just admit that you're wrong. We can expect a stop run. Very normal for us institutions to take it higher, take the stops. That's your stop losses, our short, and then take it lower. I'm pretty confident on the direction, but let's see what gives, okay? In this sense, I hope I didn't overstretch. Let's get into the comments real quick, Jens, just 2 more minutes. Bob said, totally confused, depends upon who you listen to, but agree with you, close to you for a couple of years or so. Excellent. Thank you, Bob, for your input. I really appreciate that. Yes, I think it's going to be a meddling through scenario until 2022, and then we'll see. Brexit by Alex. There's still no strategy behind the UK approach. Yep. I do expect a new referendum in 1.5 to 2 years' time, and they will Cool. Goes a little bit according to what I'm expecting as well. I think the new referendum may come in. I never really thought that they're going to leave all the way. Okay, plug in for MT. The strength, Lovro, write to me, jm@j-medrow.com, and I can get you more information on that. Industrial production, don't sound surprised. Higher yield, bad for margin. Hurricane. So, Slatko, could you show us your trading strategy instruments prefer to trade for this week? I did. GU for this week, very simple. This is a setup. What we do, Slatko, is on the institutional side, the most important thing for us is volume. We need to get into trades and out of trades, and we run campaigns lasting 2 to 3 days. There's no tick trading and no scalping and no day trading in institutions. That doesn't exist there. So for us, if you always have to if you look at a chart, think, where is liquidity? Where can we get into a trade and out of a trade? For example, right now, right here, there's no trade for us. There's not enough liquidity. Liquidity can be where you guys have stops or other institutions have stops, or liquidity can be where the so-called point of control or fair value is, i.e. where the market does what it's supposed to do, and that is fair trade. Neither the seller nor the buyer have an unfair advantage. That's what's called fair value, and that's where the market maker makes the most money because they earn the bid offer spread, okay? Chris, Royal Wedding, extra growth phase, dollar strength, Leonardo, Jörg, Modris. You said previous session that Swiss bank wants Swiss weaker. What could be the timing for Swiss reversal? Modris, I haven't looked at Swiss francs yet. What you can do is you look at the balance sheet of the Swiss National Bank, SNB, and you look at the quarterly reports and you have a look at currency reserves. You see that on a quarter-by-quarter basis, they tend to rise, and that means that they printed Swissies, sold them in the market, and bought euros, dollars, and whatever else against it. And that will show up on the balance sheet, okay? So obviously, they will, Modris, they will intervene with the market once the Swissy rises. So not at fair values, not at bottom edges, only at top edges. Think that way. Thank you, Darshan. Yeah, I love my job, man, and I love teaching. I found out that I like teaching 2 years ago, and so you guys can thank the global financial crisis and all the overregulation of banks. Otherwise, I'd still be doing this in the bank, and I love it. But now I'm leading about 100 traders, 50 of which are super active, and they are well on their way, and I'd say half of them, 25, already are long-term profitable and have taken on what I teach, and they're making serious money, and they have a completely different future because they learned the business. Stop wasting time on technical analysis, get into this business. And I got to stop because Jens is probably going to cut me off. We'll continue next week. Thank you guys for the session. Thank you, Jens, for the opportunity. Make some money, and recall, pound is risky. Yeah, don't follow it blindly. Have your own thoughts on what you want to long and short, but go with where the institutions are going. Thank you very much. Bye-bye, guys.
So as traders, we also like timing, not only teaching. So timing is all, and 15 to 20 minutes is our goal. And we, of course, have some minutes about that. Anyway, if you'd like to see and watch that again, a couple of hours later will be available on YouTube channel, youtube.com/AdmiralMarketsFX. And if you'd like to see a different trading style, just visit us tomorrow to the same time, 5 days a week, 5 different traders. So 5 times live and all the time a little bit later in our YouTube channel. Greetings from Berlin office. Thanks. Have a great day. Bye-bye.